Welcome to our exploration of the stock market basics, where we will unravel the essential components that define this dynamic financial landscape. Whether you're a seasoned investor or a curious newcomer, having a solid grasp of stock market fundamentals is crucial. At its core, the stock market serves as a platform for buying and selling shares of publicly traded companies, connecting investors and businesses in a vibrant exchange of capital. First, let's dive into some key terminology that will help you navigate this complex environment. A stock represents a fraction of ownership in a company, and owning stocks gives you a claim on the company's assets and earnings. Stocks are categorized into two primary types: common stocks, which often provide voting rights, and preferred stocks, which typically offer fixed dividends but usually lack voting rights. Understanding these distinctions will help you make informed decisions about where to place your investments. Next, it's important to familiarize yourself with the concepts of bull and bear markets. A bull market refers to a period characterized by rising stock prices and general investor optimism, often leading to increased buying activity. In contrast, a bear market signifies declining prices and pervasive pessimism, causing investors to be more cautious and sell off their stocks. Recognizing these trends can provide insights into market sentiment and potential investment strategies. Another essential aspect of the stock market is the role of exchanges, such as the New York Stock Exchange and NASDAQ. These platforms facilitate the buying and selling of stocks in a regulated environment, ensuring transparency and fairness in transactions. Each exchange has its specific listings and rules, making it vital for investors to understand where their stocks are traded, as this can impact liquidity and market conditions. Finally, let's briefly discuss the importance of diversification in your investment strategy. Diversification involves spreading your investments across various sectors and asset classes to mitigate risk. By holding a variety of stocks, you can reduce the impact of any single stock's poor performance on your overall portfolio. This approach is not only prudent but also helps investors participate in various market segments, potentially leading to better returns over time. In conclusion, grasping these stock market basics equips you with the knowledge to make informed investment choices. By understanding key terms, market conditions, the role of exchanges, and the significance of diversification, you can navigate the stock market with greater confidence. Whether you're looking to invest in established companies or emerging startups, a solid foundation in these principles will serve you well as you embark on your investing journey.